Good morning. Happy Monday. So for those of you that do not know me, I am Brianna Beers, Bree Beers to my friends, and I own the newly rebranded Bree Beers and Associates, formerly Lippa Beers and Associates. We help small businesses and individuals with tax prep and tax planning. Tax planning is our jam because it's where we get to strategize with our clients and help them minimize their annual tax burden and keep that extra tax savings, that cash in their pockets, and reinvest it back into themselves and back into their businesses. You might be watching this video in a variety of places. If it is not in our awesome Facebook community, Money, Taxes, and Finance for small business owners, then you definitely need to hop on over there and join that group. It's an amazing and supportive community over there. Or if you're there and you're new to the group, Money, Taxes, and Finance, the Facebook group, we have 2 live sessions each week, you guys. Mondays at 10 a.m. Mountain Standard Time, which is where you're at now if you're watching this live. There we have our weekly trainings. And then on Fridays, we have our updates and Q&A sessions. So if you ever want to join us live, that is the best place to be. We also have daily posts, tips, tricks, and some just really good conversations with our business owners in there. So hop on over there. All right, so today we are talking about sole props, LLCs, S Corps, partnerships, C Corps. So we're talking about all the entity types. Okay, and we're breaking it down. We kind of talked about this a month and a half ago. I don't remember. We talked about it just a while back. But we kind of just talked about, the different legal structures and how they're taxed. Okay, but now we're going to go a little deeper. Okay, I'm going to go into a little more detail because I'm learning recently that we have a lot of newbies, a lot of new business owners who need to know what kind of entity structure to set up. We have a lot of businesses who are growing, who might be one entity type and have a lot of questions about staying that entity type or moving to a different entity type. We're going to start at the very, very basics of each of all these different types. Feel free to ask questions. I'm happy to answer them. Okay, but a quick disclaimer. I am not a lawyer, so none of this should be construed as legal advice. And I'm also not your paid tax advisor on this forum or on this platform. So this is all just general information to kind of give you a foundation for your understanding. It's not tax advice, and I want you to take what you're learning here and go talk to a tax professional. Happy to be that tax professional for you if you need one. So let's start with our sole proprietors, our sole props, solopreneurs. The jargon gets thrown around, what? But who is a sole prop? Okay, we hear the term gig workers, such as our Uber and Lyft drivers. We hear independent contractors. We hear freelancers. So a sole proprietor, you can be a sole proprietor and you can be full-time. That can be your full-time job. It can be your part-time job. It could be a side hustle, or it can be your main source of income. Okay, that doesn't define a sole prop. So you are a sole prop or sole proprietor as soon as you receive a 1099 or any sort of income under your social security number. Okay, so if you do not set up a business entity, but you are making money in a way that is not through a W-2, not as an employee of another person, you are a sole prop. And you should receive 1099, a 1099 form from the person you're doing work for if you do over $600 worth of work for them. But you may not always, not all businesses do things right. If you earn less than $600 from a certain person, maybe you do little jobs, right? For a bunch of people, and you earn a couple $100s from this client or customer and a couple $100 from here and a couple $100 from there. Just because you don't receive a 1099 to report that income doesn't mean you're not responsible for reporting that money. All right. So if you're doing any sort of work, okay, like I said, side hustles, freelance work, independent contracting, anything like that, where you're not an employee for somebody else, but you're earning money for doing something, that's earned income. That's money you need to report on Schedule C of your 1040 of your individual tax return. Okay, there is a Schedule C for those of you that earn money from places other than your W-2, other than working for someone else. Okay, so again, I'm going to reiterate that you may or may not receive 1099s for those jobs. Okay, but just because you don't receive a 1099 doesn't mean you shouldn't report it. this plus side to that, actually, I'm going to address Elisa's question real quick. So she says, I'm a sole prop and my main client doesn't give me a 1099. He says he doesn't have to because he pays through Square PayPal. He tends to do things illegally. Is it legit that he doesn't give me a 1099? Actually, Elisa, it is. So let me take a little sidestep here. And this is why we talk about why it's so important as a business owner, right? No matter what terms you guys use, right? Gig worker, independent contractor, freelancer, self-employed, no matter what you call it, okay, if you're earning money without being a W-2 employee, you're a business owner, okay? You own your own little business, and it's your responsibility ultimately, okay, to report all the income you earn. And let me tell you, Elise, why there's a loophole there. If I am your client, Elise, let's say I am your main client, right? I'm your main client. If I pay you via cash or check, and I pay you more than $600, I am supposed to, by law, issue you a 1099 to report or record that income or that money I paid you. But if I instead use a credit card to pay you, if I use Square, if I use PayPal, actually, I'm not sure about Square. That's one I would have to look at. But if you're paying through a credit card with Square, I'm guessing it falls under it. But specifically, let me back that up just a smidge, Elise. If, again, I'm your client and I pay you by credit card or I pay you by PayPal, I've relinquished my requirement to issue a 1099 to you. And we actually tell clients that. Our clients who are business owners, we say, if you don't want to issue 1099s, do credit cards and PayPal because it takes the requirement off of you. And you are going to hear so many different people advise differently on this because they're misinformed. Okay. I promise you, I am right on this. Okay. This is not, a lot of times I'm in here and I'm like, this is my interpretation. This is not an interpretation. This is the rule, the law. Okay. So now, Elise, I'm your client. I pay you more than $600, but I'm paying you via credit card or via PayPal, right? So I've now relinquished my responsibility to report, to issue a 1099 to you. I no longer have to. And this is where so then you think, okay, well, then I should be receiving something from PayPal or from a credit card company, right? Well, they're not required to file what's called a 1099-K until you, as their client, have received over, I think the threshold is $20,000. So there is this huge bucket of money between $600 and the $20,000 threshold, which I have to check that $20,000 threshold. It's been a while. But there's this big threshold where there's no reporting requirement if you're receiving money via credit card or PayPal. Okay. So this all rolls back, you guys. I'm going to circle right back around. Okay. To why it is important if you are a sole prop, and no matter what you are, if you are self-employed, why it's important for you to track your income, the income that you're receiving, not rely on those 1099s. Okay, because if the IRS comes to you down the road and audits you, and they find all these deposits that you've made, and you can't trace them to something you've recorded on a tax return or whatever, then it's on you. So Lee says, I've made way more than 20K with Square and I've not received anything from them. And I will check, because again, I'm not sure Square is under that umbrella. I know PayPal is, and I know all of the credit cards are. I'll have to look at Square and I'll have to look at the 20K. I'm pretty sure that's the right number, but maybe I'm wrong. So I'll look at those for you. Back to sole props, and you're going to report all of your earnings that you're keeping track of. You're not relying on a 1099 for, right? You're going to track all of your income. And at the end of the year, let's say and you're doing it, you guys. Again, these all go back to trainings we've already done. But so it all comes back, you guys. If you haven't watched any of my past trainings, the best thing you can do is set up another bank account where you run all your business activity through. Whether you're a sole prop, an LLC, an S Corp, a partnership, no matter what, have a separate account that you only use for your business activity. And then have all of your business income go to that separate account. Have all of your business expenses come from that separate account. And then as you need money personally, you can take money out of that business account and use it personally, but then you have all of your activity in one place. Okay, so you're not digging through old bank statements and wasting time, or having an accountant or a bookkeeper, not paying them to fuddle through those old personal bank accounts or bank statements. You have everything in one place. Okay, that is always my first suggestion to any new business owner or a new client. Make sure you have a separate account. So back to my sole props, or continuing with just my sole props. So you have all your income that you've earned through whatever job you're doing, right? But now you can also deduct all of your business related expenses, right? And we're not going into what qualifies as a business expense today. Today, we're just talking, I want to keep it kind of high level. And so you have your income, you subtract all your legal or your legit business expenses, and you end up with net income. Okay, net business income. And this is on line 31 of your Schedule C. And it's going to be taxed at your ordinary earned income, okay, taxed at your income tax rate and subject to self-employment tax. Another thing that if we need to talk about, let me know in the comments and we'll have another training on income tax and self-employment tax. But we talked about tax brackets, I think, last week. So go back and watch that one. I talk about a little bit about self-employment tax on there as well. So that's my sole props. So my sole props, you guys are the ones getting income under your social security number. Okay. You haven't set up any sort of business entities separate from you. Okay. But you still have to report all that income and you get to report all the business expenses. Okay. Got me? Okay. My sole props. Done with you for a sec. We're talking about LLCs now, okay? And an LLC, as soon as you set up an LLC, it defaults to one of two things, okay? It defaults to a single member LLC if there's just one of you, which is as most of you in here, or it defaults to a partnership LLC if there's two or more of you. So if you get with a buddy and you decide to set up a business, or you get with multiple buddies and you decide to set up a business together and you set up an LLC, you're going to default to a partnership. So let me go over here to my single member LLCs. Okay, so if you're a single owner, you have your sole prop that we just talked about, where you haven't set up any legal business entity and all of your business expenses or income is reported under your social security number. Now you're like, I'm ready to take this a step forward, or I want to start a business and I want to start it a step forward. You're going to set up an LLC. From a tax point of view, a sole prop and a single member LLC are exactly the same. Your income and your expenses all get reported on Schedule C of your individual tax return, and there's no tax difference. The LLC gets set up for legal reasons. Again, not a lawyer, but it's a way to keep your business separate from your personal. Because as a sole prop, again, not a lawyer, so I'm doing my best here, but as a sole prop, if your business, if you're an independent contractor and let's say you do something and your client sues you, they're suing you personally. But if you set up that LLC, you've created this corporate veil that separates your business from your personal. Again, legal question, but that's where we are. So if you are a single member LLC, everything we talked about in terms of how you report your income, your responsibility for reporting your income and your deductions, all the same as when you were a sole prop or if you were a sole prop. Same exact taxing strategy. Now, if you're an LLC, but there's two or more of you, then you default to a partnership and you have to file a completely separate partnership return. It's called a 1065 and it's a completely separate return and you have to file it completely different. And then that partnership will issue a K-1 to each of its partners and that reports your income to your 1040, okay? So the taxing still flows through. You guys are still taxed whether you're a sole proprietor, an LLC, a single member LLC, or a multi-member LLC or a partnership. All of your income is ultimately taxed on your personal tax return at whatever personal tax rate you're in. And it is subject, all of your earnings are subject to self-employment income. Now, with my LLCs and my partnerships, if you are an owner of an LLC or a partnership, you should not be taking W-2 wages, okay? You should not be paying yourself W-2 wages, all right? And I think we're gonna do I've gotten a lot of questions on this lately, so I think I'm gonna put in a training in here down the road about, I'm a business owner, how do I pay myself? Okay, so we can really dig into that part of it. All right, so we've covered sole props, we've covered single member LLCs, and now multi-partner LLCs or partnerships, right? So now I know a lot of you have been coming to me with questions on S Corp. What is an S Corp? Why do I want to be an S Corp? Do I want to be an S Corp? All those things. And I'm going to circle back around to that. I'm going to take a quick sidestep to a C Corp, a corporation. All right, there's not very many of you out there, but I do have some of you in here, so I want to talk to you real quick. So when you set up your business, okay, you've decided, okay, I'm not going to be a sole proprietor. I want to set up a separate legal business entity, but I want to set up a corporation. Okay, first of all, setting up a corporation is something you should never, ever, ever do unless you've consulted an attorney and an accountant, okay? An accounting advisor, a tax specialist, something. Because a corporation comes with a lot more legal requirements, okay? So consult an attorney. I'm not saying you have to have an attorney set it up for you, but understand the legal ramifications of setting up a C Corp and the legal requirements for setting up a corporation. And then you want to get with your tax advisor to make sure it makes sense, okay? Because with a corporation comes a lot more, like I said, there's more legal requirements, there's more documentation requirements, and there's more expenses to record keeping for a corporation, okay? So you want to make sure it's something that you need. And again, not an attorney, not a lawyer. I'm saying that so many times today, but for us, for our clients, usually the only time a C corporation is beneficial from a tax point of view, okay, or from an accounting point of view. I'll kind of get a little broader than tax. Dun, 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 okay? So one, when you have a very high level of business income, okay, and you want to take advantage of what they call the corporate tax bracket, which is a flat 21% right now. That's one reason that may cause you to want to elect corporate status and be a C corporation. But do not let the 21% alone make that decision for you, because there's many, many more moving pieces to just that 21%. All right. And we can talk about that if that's something that interests you guys in a later time. Okay. So that 21% tax bracket is appealing, but it's only actually beneficial for high income businesses. That's one. And then the other thing is if you want to issue a lot of stock. So if you're going to do crowdfunding, or you're going to issue shares for equity, if you're going to issue employee stock, then you're going to want to talk about being a C Corp. But if employee stocks, crowdfunding, and ridiculously high income are not three things that are on your radar, then there's really no reason to be considering creating a C corporation. Worth a conversation with your tax advisor and your attorney if you're still interested in one, but make sure you really understand what's involved with that before you make that C Corp election. All right. So now we go to this thing called an S Corp. All right. And most of the people that ask me about S Corp are my sole props or my single member LLCs. Okay. Although if you're a C corporation, you can also make an S Corp election, but I'm getting it from my sole props and my single member LLCs that want to become S Corps. All right. And I am going to give you a general understanding of why S Corps are so appealing. We love them. Okay. Most of our business clients are S Corps. But that's because of the income level that we typically deal with our businesses, with our clients. Okay. So I'm going to give you guys some general information. And if your ears are perking up, like that might be me, that might be me, definitely talk to your accountant, all right, about it. All right, but I'm not only going to talk about the reasons to become an S Corp, I'm going to talk about the added responsibility of becoming an S Corp as well, okay? Because the problem I'm seeing with a lot of new clients that are coming to me that are S Corps is that their previous accountant, their previous tax advisor, saw their income level, was like, oh my gosh, you are going to benefit from being an S Corp. Let's do it. Don't ask questions, just do it. And didn't really have the discussion of all the other things involved. Okay. So that's what we're going to spend this last little chunk of time on. What is an S Corp? Why is it appealing? But what are kind of some of the setbacks? Okay. But again, making this S Corp election is not something you do without consulting a tax advisor. Okay. Now the S Corp election, you guys, it's just a tax election. This is not something you're going to talk to your attorney about, or your attorney about, because it's not a legal structure. Okay, it has nothing to do with the legal structure of things. It's just a tax. That scared me. It's just a tax election. Okay, so you can be an LLC, you can be a corporation, you can be a partnership, you can be a whole bunch of things and make this S Corp election. So with an S Corp election, first of all, there is a whole nother separate tax return, okay, that's required. Okay, so if you're a partnership, not a big deal, because a partnership is already, the partnership is already having to file a second tax return, a business tax return, right? But if you're a single member LLC, and right now you're just filing your business on Schedule C of your personal return, you have to take into consideration the fact that making an S Corp election, you are now going to have to file a completely separate return. So if you are self-filing your return, Are you capable and confident to do that? Are you capable and confident to file a completely new business tax return? Or if not, you got to think of the added expense of having someone do that for you. The second thing with an S Corp that people don't think about, okay, is that the officers of an S Corp, which, the working officers of an S Corp, which are you guys, right? And I'm an S Corp, so I'll use myself as an example. So I am a working officer of an S Corp. Okay, you have to give yourself a payroll. You have to put yourself as a W-2 employee on payroll and pay yourself a reasonable salary. We'll circle back to reasonable salary in just a second. But again, this is another added expense that you need to take into consideration when deciding if you're going to make an S Corp election or not, okay? There are some fantastic payroll companies, payroll providers out there. We just started our relationship with Gusto back up. They get rave reviews from people. So we are just talking to them just mostly I appreciate them for just you guys, for like single member LLCs. I'm an ADP accountant advisory board member. And ADP is our go-to. Okay. We love ADP. And the biggest reason we love ADP is because we love all the other stuff that comes with them. They have HR platforms and products and services. Their payroll reports, if you're just there for payroll, are phenomenal. I love them. But yeah, they have HR, they have retirement, they have a bunch of different things that you can consolidate if you need more than just payroll. Okay, so if you do need more than just payroll, I always suggest ADP. I know I've heard that Gusto does that, but I don't have the experience with them to recommend them. Okay, my heart belongs to ADP. Okay, so thinking about S Corps. All right, so a whole nother return if you're a single member LLC and thinking about filing an S Corp election. So you have a completely separate tax return now. You have to run payroll. Okay, so there's that added expense. But let me talk about the benefits. So you're like, okay, there's all these added expenses. Why would I want to be an S Corp? So when we talked about LLC and partnership, right, we talked about that self-employment tax. I do got to go into this a little bit to explain, to make you really understand what this is. With an S Corp, with a single member LLC or a partnership, right, all of your earned income from your business is going to be subject to self-employment tax. Okay, so let's say my net profit in 2019 was $100,000. Okay, meaning I had gross receipts, I took all my expenses, and I still made $100,000. So that $100,000 is not only going to be subject to my income tax rate, which I believe, if I'm correct, should be 24%, maybe 22%, doesn't matter. But it's also going to be subject to self-employment tax, which is, I believe, 15.8%. Okay, so I'm going to have to pay $15,800 in self-employment tax on my earned income from my business for that year. Okay, not taking into account my income tax rate. So now let's say this is a great time. Let's consider S Corp. Let's consider making an S Corp election. So the first thing you need to do when you make an S Corp election is calculate and determine what a reasonable salary is or a reasonable compensation. And this is something you absolutely should be doing with your tax professional. And let's say we do all the calculations, we do all the research, and we decide that $50,000 is a reasonable salary for what I'm doing in my business. This is not an arbitrary number, but this is also not a number that just there's this magic chart that tells us, okay? Reasonable compensation comes from but takes into account a bunch of different factors. So it's not just something I can pull out of a hat. Okay. It's something that varies business to business, industry to industry. And I mean, seriously, business to business. You can have two businesses in the exact same industry that do the exact same thing, but their reasonable compensation for each of their owners might be different. Okay. But let's say, for the sake of ease, that we have determined that $50,000 is a reasonable salary for our business. So now, when we file our S Corp return, it issues a K-1 to us personally, and it shows us our income, but we had to run a W-2 wage as well. So the business issues me a W-2 for my $50,000 in W-2 wages. It pays its half of payroll taxes. I pay my half of payroll taxes, just like any other W-2 employer. The business gets to deduct that $50,000 of wages and all the payroll taxes related to it from the business, right? So now instead of the business, when it was a Schedule C, reporting $100,000 of business income and it all being subject to self-employment tax, now the business is issuing me a W-2 that shows I have $50,000 in earned income, of which payroll tax is paid. And then the business is going to issue a K-1 that shows $50,000, actually less than $50,000 because of payroll taxes as well, but less than $50,000 in earned income. Okay, let's just, for the sake of ease, let's call it $45,000. It wouldn't be, but let's just say. So now back to me on a personal level. On a personal level, pre-S Corp election, I was paying income tax and self-employment tax on that $100,000. I'm still paying income tax on almost $100,000, okay? Because I have my $50,000 in W-2 wages, and now I have my $45,000-ish in earned income. So I'm still paying the same income tax, but there's no self-employment tax on that earned income, on that K-1 income, you guys. There's no self-employment tax on S Corp ordinary income. But we paid probably 16%-ish on our W-2 wages, all right? But that's half of what we would have paid if we stayed a C Corp or a Schedule C. So Schedule C, $100,000 subject to our income tax and 15.8% in self-employment tax. So we paid $15,800 just in self-employment tax as a Schedule C. Now, exact same earned amount, right? We made $100,000, but $50,000 of it was W-2 income to us personally. Between us and the business, we paid about 16% on that. So about $8,000 in payroll taxes. But that other $50,000 of K-1 income from the business comes through self-employment tax-free. So we cut our self-employment / payroll taxes almost in half by making that S Corp election. And that is why S Corps are so appealing to people who make over a certain threshold. So essentially that threshold is whatever your reasonable compensation would be. Okay, so getting an accountant or a CPA or a tax advisor to do a reasonable compensation for your business is usually a must if you're gonna make that S Corp election. Another thing, you guys, going back to the why is, some, like I said, a lot of CPAs or a lot of tax advisors just push these people into S Corps. But a few things to consider is, what if that was 1 year? What if I just had one good year where I had $100,000, but normally I make $20,000? Is S Corp election really what I want to be doing going forward? Because of all the other things that are involved, that are required. Once you make an S Corp election, okay, you can revoke it, but if you revoke it, you can't re-elect it for 5 more years. Okay, so there's just a bunch of things to consider, which is why your head might be exploding right now. So all of these things are why you should consult a tax advisor if you're thinking that this might be a good fit, or you just want to know more information on whether it would be a good fit for your business. So she says, can S Corp owners apply for unemployment when business is slow, or no, because it's your own business? Yes. And so here's where being an S Corp, another benefit. This is great, Elise. So I, as an S Corp officer, didn't have to wait for PUA to be figured out and apply and figured out on the federal level. So for those of you unemployment, PUA, so PUA was the one that expanded unemployment to the self-employed. But as an S Corp officer who is a W-2 employee inside my business, I got to apply for unemployment as soon as I couldn't pay myself anymore, right? As soon as work went down and I was no longer able to pay myself those W-2 wages because we didn't have money coming in, I got to go claim unemployment. So keeping in mind though, guys, as an S Corp, your unemployment is only going to be based on what you receive as W-2 wages. So if you're taking draws, which are not taxed, okay, you're not going to be able to take unemployment on that. Your unemployment isn't based on your full business income. It's only based on your W-2 wages. All right. And there are so many reasons that we want to, that it's good to take not get chintzy on your W-2 wages as an S Corp. And we can talk about that at a different day, because that's a whole half hour in itself. So Irene says, can an S Corp pay with a W-2 and also a 1099? So Irene, are you saying can it pay its owner with a W-2 and also a 1099? Because S Corps can have employees and 1099 contractors still. I'll give you me as an example. I pay myself as a W-2 employee because I'm an S Corp and I have to. I also have 2 employees that I pay via W-2 wages. And I have some contractors that work for me who I pay via 1099. So paying non-owners via W-2 or 1099 comes down to, are they actually a contractor or a employee? But paying yourself, no. S Corps should not pay their officers with 1099s. S Corps should pay their officers only through W-2s. And then let's add to that. So let's say we have my reasonable salary. Let's say it's $100,000. And at the end of the year, or like sometime throughout the year, we're having a really great year. We have, a couple $100,000 in the bank, and I've paid my employees, whatever, but I need to take some money out for whatever reason. I need to personally take some money out. It's called a distribution. You can also hear called a draw, a distribution, a disbursement. Okay. That money, it's in the business, but just like when you're filing a Schedule C, as long as you've taken out your W-2s, you've taken out enough wages. If there's monies and you need to take more, you can take it out as a draw. Okay. Again, this is something I would just talk to your tax advisor about. Okay. If it's not something you normally do, or it's hey, tax advisor, I would really like to take out $10,000 out of my business. Can I? And your tax advisor can be like, yeah, you've already paid yourself $100,000 salary. We consider that reasonable. You're good. Or they can be like, no. You've only taken out, $30,000 in W-2 wages, which is not considered reasonable. We need to run this through payroll, additional compensation. All right. So these are things, this is why you have either a tax advisor or maybe you have an accountant on staff, depending on how big you are. A lot of businesses I know have bookkeepers. This may or may not be a question for your bookkeeper. Okay. The knowledge of bookkeepers, you guys, just like accountants, is very, very vast. There are bookkeepers who all they do and all they want to do, all they should do, all they know how to do is, the basic, the day-to-day, they enter your accounts receivable, your bills, they reconcile, they do all the day-to-day work. And that's what they're, that is their niche, that's their jam, that's what they do. And then I work with a lot of bookkeepers who have much, a wider scope of knowledge and expertise, and can probably answer a lot of tax questions. Okay. But you've got to know what the knowledge scope of your bookkeeper is. Okay. And that's not to speak badly about anyone, right? But just like as a tax advisor, okay, I have a limited scope of knowledge. Okay. But I will be the first to tell you, I don't know that. So let's find someone who does. Just knowing you got to know who your bookkeeper or how your accountant is, okay, in their scope of knowledge. Okay, so yeah, until next week, you guys, I just want to make sure I didn't miss any comments. Looks good. All right, I will see you guys next Monday.